Dear Glanbia Board of Directors, don't be afraid to give up what's good for what's great. So I'll decode that introductory statement a bit later in this content, but on April 30th of 2025, Glanbia updated the public markets by releasing its first quarter 2025 interim management statement. And I'll be utilizing those financial statements along with the notes I took while listening to the earnings conference call and any relevant publicly disclosed information to obviously update you on the recent performance of the Glanbia supply side and branded product divisions, but also utilize everything as the contextual backdrop for my expanded strategic commentary around global nutrition market dynamics and trends. And just some quick financial mumbo-jumbo housekeeping for the bulk of my audience that's located within the United States, since Glanbia is not an American corporation and has different reporting standards for their public markets. Any revenue numbers you'll hear throughout this content will only be in year-over-year comparative percentages. Moreover, you'll be hearing me provide those comparative percentages on a constant currency basis, which just means the currency fluctuations of the multinational company are stripped out for the ease of comparison. But that's enough for the formalities. Let's start with a quick update on the financial data. In the first quarter of 2025, Glanbia wholly owned group revenues were up 7.2% year over year. This result was comprised of price being up 5.2%, but volume was down 0.7%. Additionally, Glanbia had a positive 2.7% impact due to the acquisition of assets during this comparative period. For those that might not be too familiar, the supply side of Glanbia recently announced it had created a new operating model separating its Glanbia Nutritionals business into two new segments: health and nutrition and dairy nutrition. The intent of the new structure is designed to further streamline the business, increase focus on end-use markets, and to provide greater insight into Glanbia's value drivers and growth opportunities. Health and Nutrition is a leading global ingredient solutions business providing value-added ingredient and flavor solutions to a range of attractive, high-growth end markets. In the first quarter of 2025, revenue increased by 24.9% year over year. This was driven by a 6% increase in volume, but was partially offset by a 0.4% decrease in price. Additionally, the acquisition of flavor producers in April of 2024 positively impacted revenue by 19.3%. Dairy Nutrition is the #1 producer of American-style cheddar cheese in the US market, but more importantly for my audience, the #1 producer of whey protein isolate and provides a wide range of dairy and functional protein solutions. In the first quarter of 2025, revenue increased by 18.9%. This was driven by a 3.6% increase in volume and a 15.3% increase in price. But let's transition into examining the recent performance of Glanbia Performance Nutrition, which is made up of branded products like Optimum Nutrition, among a handful of others. In the first quarter of 2025, GPN revenue declined by 6.6% year over year, driven by a volume decrease of 5.8% and a price decrease of 0.8%. If we look at revenue by region, starting with international, the activity in the first quarter of 2025 resulted in revenue growth of 6.1% year over year. The performance within international markets was driven by good volume growth across primary markets, including Asia Pacific, with Optimum Nutrition continuing to gain traction with consumers in key markets, supported by the continued development of in-market capabilities. In terms of the Americas region, the activity in the first quarter of 2025 resulted in revenue decline of 13.2% year over year. And to provide more context around that very weak performance, especially within the largest GPN market of the United States, let's dig a few layers deeper that might help provide more impactful storylines. And we can begin by quickly looking for anything notable happening within specific US sales channels. Glanbia leadership noted that GPN volume decline and related lower revenue was stemming mostly from activity within wholesale club and specialty channels. And this might be an overly simplified explanation of why, but recently Glanbia has deprioritized specialty retail in the US market, a sales channel that has experienced softness within the supplement industry. And in terms of wholesale clubs, Glanbia has prioritized this sales channel greatly, but is experiencing an uptick in both branded and private label competition. But shifting into examining some categorical insights, if negative impacts from non-core brands were excluded from the quarterly performance, GPN revenue would have only declined by 4.8% year over year. And if you're scratching your head on which GPN brands are considered non-core, last quarter it was announced as part of the branded products portfolio review to ensure focus can be placed on high growth opportunities. Glanbia had begun the sale process on Body and Fit that was acquired in 2017 and the weight management brand SlimFast that was acquired for $350 million in 2018. Though GPN is still the house that Optimum Nutrition built. Initially acquired 17 years ago, Optimum Nutrition generates approximately $1.2 billion in annual revenue and now represents 66% of the total GPN revenue. While Optimum Nutrition revenue fell 3.1% year over year in the quarter, it continues to strengthen brand awareness and engagement through new campaigns, sponsorships, and media partnerships, helping drive global distribution growth and velocity increases. In terms of US market tracked channels retail consumption growth, Optimum Nutrition was up 0.4% year over year over the last 13-week period ending April 5th of 2025. Transitioning to the other largest share of GPN revenue, the healthy lifestyle brand portfolio makes up 19% and includes Isopure, Think, and Amazing Grass. While these healthy lifestyle portfolio brands have collectively performed relatively strong over the last several years, revenue fell by 7.7% year over year in the quarter. And then, in terms of US market tracked channels retail consumption growth, the healthy lifestyle brand portfolio was down 0.9% over the last 13-week period ending April 5th of 2025. And then quickly, before decoding that introductory statement, I wanted to provide an update on the high-end whey protein market. Though various supply and demand dynamics pushed high-end whey protein costs to peak pricing levels materially higher than even experienced in 2022, it looks like whey protein isolate pricing has finally crested, but is still at a historically elevated level. The better news, downward price action happened slightly ahead of planned global manufacturing capacity increases, which is expected to help drive input costs down even further over the next 12 to 18 months. But that subject matter is arguably a great transition into the final part of this content. And that's mainly because when I talk about elevated dairy market pricing, it's usually followed up by strategic commentary around mitigating cost inflation. Yet, viewing everything related to this elevated dairy market pricing through a branded products only strategic lens doesn't work for Glanbia, as they are a distinctively unique business that owns, yes, a sizable branded products division, but also an equally large dairy nutrition supply side segment. Though don't assume everyone believes that uniqueness is particularly a positive attribute. In fact, it was recently described as complicated to understand, difficult for the market to value, and even harder to manage, which reminds me of something I stated more than 3 years ago. I want to talk about the German activist investor Clearway Capital building a small stake in Glanbia and kind of explain what that could mean for the global nutrition company. Like any activist investor, Clearway Capital believes the business is undervalued and subsequent changes are needed to be made by leadership to unlock additional shareholder value. The core ideas suggested by Clearway Capital are that Glanbia should spin off its Glanbia Performance Nutrition division into a standalone company with a dual listing in the United States and Ireland. Secondly, that the SlimFast brand strategy and positioning needs a major overhaul, which, as you kind of already heard, is already kind of in process by Glanbia. So it's really just that spin-off idea that would need consideration. So here's my hot take. Clearway Capital isn't entirely wrong, and it really aligns with comments I've made publicly for years in my content. Glanbia Nutritionals plus Glanbia Performance Nutrition brands should be more valuable together than the sum of the parts, but I'm not sure Glanbia has ever really gotten aggressive enough in its business strategy to fully capture that. Now, if you don't follow the Irish financial news cycle like I do, you might have missed that Clearway Capital is back again. But this time, Clearway Capital is hoping to get support from Tirlán Co-op, which is Ireland's largest farmer-owned agri-food and nutrition business. Also, Tirlán is the largest shareholder in Glanbia. But while I couldn't get access to the exact letter sent to Tirlán urging it to support a plan to split up Glanbia, Clearway Capital did recently address the Glanbia board of directors at its annual general meeting, requesting the global nutrition company initiate a strategic review into potential disassembly. The activist investor noted that the sprawling and complex conglomerate structure is the root cause of volatility, and the case for vertical integration has clearly not held true, as it didn't help predict or manage whey price cycles. Moreover, Clearway Capital stated there's an obvious solution: separate the businesses. And just like 3 years ago, I'm still largely aligned with those Clearway Capital statements. But the major difference surrounds our motivation as to why we've been urging Glanbia to be split up into 2, or at this point, maybe 3 different businesses. Though I agree with Clearway Capital's objectively correct statement that Glanbia has underperformed the general market over not only the last 3 years since the original activist investor letter was sent, but the last decade. I'm obviously not managing a hedge fund with a large stake or even a small individual shareholder in Glanbia. So when I say that underlying businesses, when taken separately, have always been worth more than what the share price at any given time would imply, it's motivated not by direct short-term gain, but by an indirect long-term benefit. And for those that are new to this content, whether employed by Glanbia, an industry professional, or just a lover of the supplement space, you might be a bit confused why I'm even poking the bear then. Since I don't have monetary skin in the game, I've always voiced my frustrations as someone that's been a highly active participant and advocate for the business maturation of the sports and active nutrition category within the broader CPG industry. So when I, someone with deep domain expertise, can see possible resistance and challenges ahead or gaps in the strategic game plan, I'll oftentimes passionately offer up logic-based constructive criticisms, especially in companies that I also have an available open line of communication with offline. Finally, I plan on being around for several more decades, so I root on the success of every large publicly traded company involved within the sports and active nutrition category, as I'm a big believer that high tides lift all boats, and that has compounding long-term effects. But as to whether this second attempt by Clearway Capital will be taken more seriously, Glanbia CEO Hugh McGuire did tell analysts on the earnings call that there are no sacred cows and that the company would listen to all shareholder proposals. So maybe, just maybe, GPN will spin off and list itself on the US stock exchange, making the corporate structure less complicated to understand, easier for the market to value, and even easier to manage, which would undoubtedly create tailwinds for Optimum Nutrition and other brands within the portfolio, further elevating the sports and active nutrition categorical respect within the broader food and beverage CPG industry. But I hope you enjoyed the first principles thinking that went into my latest YouTube video. If you did, can you do me a favor by hitting that like button? That quick and free action helps YouTube know my content is worth spreading to more people. Also, we're getting really close to reaching my next subscriber goal, and it would be great if you join me on this journey. But to do that, we need to fix the fact that slightly more than 3/4 of you that are watching this video right now are not subscribed to my YouTube channel, and that hurts my feelings. Regardless, I want to thank you for giving me some of your attention and time, and I'll see you on the next one.